Hi everyone, welcome to the Mighty Trades channel and welcome to another episode of the Global Market Outlook. So last week we saw a good up move in all the major indices and even the global markets. So let's quickly take a look at what happened last week in the market to understand what could happen in the next couple of weeks. So let's start with certain big global indicators. So here we have in front of us the chart of Dow Jones Industrial Average. And if you look at last week, Dow Jones moved up by 5.5%. This looks like a very strong move. If it is able to go close to 35,500-ish, basically this zone, then I think it will go back into its nice sideways movement instead of the downward movement that has been going into. So this is a very good sign for Dow Jones. Same thing goes for S&P 500. This also saw a huge recovery. S&P 500 is a much larger index because it's made up of 500 companies of the US. So this was not a short or a very small concentrated rally. This rally came across all sectors, across large companies. So this is a very good sign that the S&P 500 moved up by 6%. Nasdaq also moved up extremely strongly, moving up by 8%. This is a really good sign. And I think the best indicator is the US VIX. The US volatility index has crashed last week by 22%, going below 23. If this is to go below 20, that will just mean that the markets are completely calm and cool and nothing's gonna happen. So these are really good signs for the market. If we look at the other global indices like European markets, France has moved up by 5.75% last week. Again, a very good sign. The German market has also done extremely well over the last 2 weeks, and the UK market has also done phenomenally well over the last 2 weeks. Let's have a look at some Asian markets. The Japanese market also showed good recovery, but the Japanese market has been in a downtrend since a very long time now. So we shouldn't really pay too much attention here. However, one good thing that happened was in China. So you guys might have heard that China has gone back into lockdown. Some 24, 25 million people have been put into lockdown because of the rising COVID cases. So that led to a huge sell-off in the Chinese market. But the Chinese market recovered very strongly back. We can see this strong bullish reversal candle that happened last week. It has completely engulfed this candle. If it is able to close this gap that has been created here, that will be a very good sign, and we could see the Chinese market going up back to 24, 25,000 levels. If we look at the US dollar index, the US dollar index has corrected a little bit this or not a little bit, actually quite a bit, by close to 1%. This is also a good sign. If dollar continues to fall, that means money is going back from the US back to emerging economies, is being reinvested again. So that will bring a lot of confidence in the global markets, especially in the emerging markets. Let's have a look at certain commodities. So we have the US Brent crude. The Brent crude has corrected from a high of 138 to 107. It had even reached below $100, but I think it recovered in the last couple of days. If we switch over the daily chart, in the last 2 days, it moved back up again strongly due to certain supply concerns that people are having from Russia. But let's see, as if crude can go below $100, that will be a very good sign for the global markets. Gold has also corrected. It's not making a runaway rally. That is a very good thing. That means people are willing to take more risk and take out money from gold and go back into equities. That is also a very strong sign. Now let's take a look quickly at our own chart, which is Nifty. Nifty moved up by close to 4% last week. One very important thing I think is that Nifty gave a close above the 200-day moving average. This was crucially important for the market. Now the next very important support resistance that the market needs to go and break is 17,800. If that is broken, that will clearly let us know that this head and shoulder pattern has failed over here. It potentially could have already failed, we are not sure, but I will be really sure if the 17,800 is crossed, that the head and shoulder pattern has failed. Now our next stop loss, or the next downward movement, can only begin if the market again goes back below the 200 day moving average. If it does that, we'll be back into a slightly negative phase of the market. So let's hope that the market continues to stay above 200 day moving average. If it consolidates in and around the 200 day moving average for a few weeks, I think that will be the best thing to happen, because it will allow the market to create a base over there, which will make it a really strong support, and then we can have a good up move from there. Let's take a quick look at the USD INR. The USD INR has also corrected, which means the rupee is getting stronger than the dollar. If the rupee is to go below 75 rupees per dollar, that would be a great sign for us, because that means foreign investment is coming back to India, and that should really boost the Indian stock market. Let's quickly go through our sector-wise analysis to understand how each sector is doing. If you look at the small cap index, the small cap index has also given a good closing last week. Mid caps have done, I think, even better than small caps by moving up by 2.7%. So mid caps are doing really well. Metal continues to outperform, I think, every sector right now. It gave a very nice um, sort of a dragonfly or a hammer sort of a pattern here. So it is really, really trying to stay at its all-time high right now. I think some big move is going to happen in metal stocks. Banking sector also did great. PSU banks also did well. IT sort of consolidated most of last week. No big move here. FMCG has finally started recovering, so that is good. Media stocks, media stocks also largely consolidated last week. Gave a closing above 2%, 2% higher than last week, but largely a consolidation move. Infra stocks also recovered very well, but still trading below their all-time highs. Reality stocks also recovered very well, but reality index has a long way to go. I think reality stocks still need a lot to pick up. Auto sector also relatively doing well. Energy is at its all-time high. So energy and metal are looking strongest right now. They seem to be leading the rally. Consumption stocks also showed a good reversal last week. Finance stocks also did really well. Pharma stocks also did okay. Largely, I would say a consolidation move. They just moved up by 1%. And if you look at the entire broader market, which is Nifty 500, the rally that we saw last week was a nice broad-based rally all across the market that we saw. So the good signs overall, good signs all around. And if you look at Bank Nifty has done phenomenally well by moving up by 5.5%. So I think finally FIIs could end up becoming net buyers, because if they start buying stocks like HDFC, Kotak Bank, which are FII favorites, then we could see a nice rally coming into the market. So let's see what happens. Last week was very good, as long as Nifty can stay above the 200-day moving average. And let me just quickly take a look if Bank Nifty is above the 200-day moving average. No, okay. So Bank Nifty is just below the 200-day moving average. So if Nifty and Bank Nifty, if they are able to give a close above 200-day moving average, then I think, then I think we'll see a really good base being formed in the market. And if the market just consolidates here, I think for the next 4 or 5 weeks, that will be the best thing that can happen. It will allow money to rotate in sectors that need to get rotated in, and form a new base, and then move up from there. So I hope you like this analysis. Thank you for watching the video. Goodbye.